Okay, so we're going to talk about the sample paper 1, accounting and auditing, including corporate law. I'll give you a quick rundown on how this procedure is going to be followed. See, I'll first read the question and then give you some time to answer the question. You can even pause the video if you need more time. And then we'll check the answer and we'll find the relevant explanation for it in case we got the answer wrong. Okay, so the first question. Yash Limited wants to prepare its cash flow statement. It sold equipment of book value 60,000 at a gain of 8,000. The amount to be reported in its cash flow statement under operating activities is. Here the word operating activities is important. So the answer is actually nil because this is an investing activity. Okay, and the amount to be reported in a cash flow statement under operating activities is nil. Next, let's go to the second question. As per AS 13, when current investments are reclassified as long-term investments, transfers should be made at. So the answer is lower of cost and fair value at the date of transfer. So AS 13 deals with accounting for investments. And there are two cases of reclassification. The first one is where long-term investments are reclassified to current investments. So in this case, investments are transferred at an amount which is lower of cost and its carrying value at the date of transfer. Okay, now the second one relates to this case where current investments are reclassified into long-term investments. In this case, the investments are transferred at an amount that is lower of cost and fair value at the date of transfer. Next is A16. Income from temporary investment of borrowings that are eligible for capitalization is to be treated as credited to P&L, added to general reserve, deduction from borrowing cost incurred, added to capital reserve. So the answer is deduction from borrowing cost incurred. We learned that the amount to be capitalized will be equal to the actual borrowing cost, okay, minus any income on temporary investment of the borrowed funds. Like for example, the excess money you could have invested it in FD or something which will give an interest gain, that you have to deduct from the borrowing cost. Okay, so C is the right answer. Next, the fourth one. Which costs are not included in the carrying amount of an item of PPE? Cost of site preparation, cost of relocating the operations, installation and assembly cost, initial delivery and handling cost. You'll have to see which is directly attributable to bringing the PPE to the current location and condition which is necessary. So the answer is cost of relocating the operation. So some of the items which you shouldn't include in the carrying amount of PP is this: cost of relocating the operations, then initial losses. When the asset operates at lower capacity, you can't include this. You can't include administrative and general overheads. Okay. Out of the given accounting standards, which AS is not applicable to the level 2 and the level 3 non-corporate entities in the entirety? AS 17 segment reporting, 28 impairment of assets, 19 leases, 29 provisions, contingent liabilities and contingent assets. So if you see here, accounting standards not applicable to level 2 and level 3 include cash flow statements, segment reporting, related party disclosures and discontinuing operations. Okay, so we were discussing the fifth question, in which if you see in exemptions, relaxations for SMEs, accounting standards not applicable to level 2 and level 3 enterprises, cash flow, segment reporting, related party disclosures and discontinuing operations. Next question. If one large asset has a number of individual components with different useful lives, It should be depreciated by treating as one asset without disclosing in the notes to the financial statements, breaking down into different components, expensing it all. D. Treating as one asset but disclosing in the notes to the financial statements. So the answer is breaking down into different components. To understand this, we have an example. Like you have an airplane. Okay. So now the airplane might have a useful life of 20 to 30 years. But the engines will need replacement every 5 years. So if you see these options, the best course of action would be you have to break them down into different components. Okay. Separately note down airplanes, separately note down engines, and then depreciate it separately. Next is seventh sum. AB Company Limited has 1 lakh shares of common stock outstanding on January 1. Additional 50,000 shares were issued on July 1 and 25,000 shares were reacquired on September 1. The weighted average number of shares outstanding during the year on December 31st is what? Okay, so how do you solve it? First, let's start with this table. January 1. Okay, there are 1 lakh shares. Now, additional 50,000 shares were issued on July 1. So, on January 1 till July 1, the outstanding balance was 1 lakh. Okay, and the time period between January 1 and July 1 is 6 months. So, out of 12 months, 6 months, this has been the outstanding balance. Now, let's come to July. So, 50,000 shares were issued. Okay, and the next date is September. So between July and September, we had 1,50,000 shares because we had 1 lakh shares and then additional 50,000 shares were issued. Okay, between July and September, there are 2 months. Now last, in September, shares were reacquired, which means you have to minus reacquired by the company. Okay, the company got it back. So that means the shares in issue, the shares which are outstanding are 1,50,000 minus 25. So we get this. Now, between September 1 to December 31, there are 4 months. Okay. So, what you do is you take this and you multiply it with this. You will get these numbers. When you add all these numbers, you will get average number of shares outstanding. You would have done this calculation in EPS calculation. This EPS, the earnings per share calculation. So, this is just to revise that. Next, we come to the 8th question. A sold machinery having WDV of 40 lakhs. WDV of 40 lakhs to B for rupees 50 lakhs. And the fair value is also 50 lakhs. And the same machinery was leased back by B to A. The lease back is in the nature of operating lease. So, what will the treatment be? So, A Limited is there. It's sold machinery. Okay. To B Limited. The WDV was 40 and the fair value and also the sale price is 50. Now what did B do? B leased back the same machinery to A in the nature of operating lease. So the treatment will be A Limited should amortize the profit of 10 lakhs over the lease term. A Limited should recognize the profit of 10 lakh immediately. A Limited should defer the profit of 10 lakh. No profit should be recognized by A Limited. So think an answer. The answer is A Limited should recognize profit of 10 lakhs immediately. So this is a lease back transaction. And in that, any profit or loss arising out of a sales transaction is recognized immediately. Okay. Now this lease back is operating lease. So when it is the answer is A Limited should recognize the profit of rupees 10 lakhs immediately. Now that is because any profit or loss arising out of a sale transaction is recognized immediately when sale price is equal to the fair value. So you see here the sale price is equal to the fair value. Okay, that is why A Limited should recognize the profit of 10 lakh immediately. Which item will form part of share capital as per Schedule 3? Share options, outstanding account, forfeited share, share application money pending allotment, capital work in progress. The answer is forfeited shares. Next question. If the turnover of a company is 100 crores, then the figures appearing in the financial statement may be rounded off to nearest hundreds, nearest thousand, nearest lakhs, not rounded off at all. Okay, so the answer is nearest lakhs. That's because now turnover. If turnover is an amount which is below 100 crores, so here we see below 100 crores, and the second criteria we see equal to and above 100 crores. Okay, so let's see. Now the turnover is below 100 crores. Here the turnover is greater than or equal to 100 crores. So what happens? The rounding off criteria. So you have to round this off to the nearest hundreds, thousands, rupees lakhs, or millions, or decimals thereof. But in case amount is equal to or above 100 crore rupees, then it should be rounded off to the nearest lakhs, millions, or crores, or more, or decimals thereof. That's why the answer is nearest lakhs, because the turnover of the company is equal to 100 crores. Thank you for watching this video. I'll see you in the next part.